Hey guys, everybody, super happy to be here once again. And today I'm having, a really, I think, special conversation because we're not going to be talking, inherently about quantitative research. We're not going to be talking about quantitative modeling necessarily, but we're going to talk about those topics, uh, you know, um, in a very comprehensive manner, but looking backwards about the industry and speaking about how products supposed to get into the market, how we experience clients, and how the entire business and the entire infrastructure of exchanges in products are actually working and surrounding the quantitative field out of it. So, without further ado, Manuel, super excited to have you here. Welcome, bienvenido. How are you today? And before we
Many
start,
thanks.
brilliant, brilliant. Before we start, I would love if you can give a sneak peek about yourself to the audience, and that would be awesome.
Well, yeah, I started my journey when I was 18. I started trading options. I didn't even know what they were. Thankfully, I lost everything pretty quick. So I capitalized on this learning early on, right? And then I started working at a hedge fund. I saw the huge technological gap there is in the industry. I don't know if it's Spain specific or more like uh, worldwide, because more specifically, the gap I saw is that managers have a lot of finance experience, but zero with technology, right? They are still relying on the same old tools like Excel. And I think they're missing a lot of analytical capability. So what I did was I left and I started Alpha Rho. It's been 4 years already. I'm 25. And we already have a first fund working. It's a global multi-asset fund, equities, fixed income, currencies. And this fund is run by two teams of AI analysts. Okay, we have completely digitalized the asset management structure with AI CSO, Chief Strategy Officer, AI CIOs, and AI analysts beneath. For this strategy, we have a equity CIO and a fixed income CIO, which with 250 analysts beneath, which they on a quarterly basis have like an investment committee selecting the top 10 best performers, and they consensuate the overweights and underweights in the portfolio. And so far, so good. We are on the top quartile at the global level by Financial Times with this fund. And yeah, like with the current war there's in the Middle East, volatility has gone up quite a lot, and the fund has managed to outperform its peers by a wide margin. Um, and
Congratulations.
and this is something that my AI analysts were positioned for. Like sometimes people say, no, AI cannot predict events that never happened before, right? Well, our analysts are doing it. So that's something. Um,
Mhm. I have to kick off that conversation with a minor story. For those who doesn't really know, I am a second-time entrepreneur. Right now, I'm doing my fourth startup, two that I was a part of and two that I was founding. And the first one that I was founding, I was trying to model discretionary traders, independent discretionary traders that, came out from, large proprietary trading firms, well-known ones, and now they're looking for a service or a collaboration to model their behavior across variations of market regimes like with machine learning, deep learning, and we have tried to model their behaviors using large language models. And as I understand, you do your job right now with large language models, but creating a sequence of large language models, which is exactly what I was trying to do back then.
yeah,
And I would like to ask from you about your experience. I guess that you're not doing it for 2 years. You're doing it for quite a long
for
period.
4 years. Yeah,
4 years.
yeah. Since 2022.
Since 2022. And I would like to ask you, how do you see the evolution of large language models and their capability to work as an agentic system? How that agentic system could be modified, because that's a really hot topic nowadays, especially in archive. Researchers all across the globe, publishing different papers about manipulating market microstructure with um, with agentic systems, and for me, it sounds pretty lucrative thing, but pretty dangerous as well. I would like to ask from you about your experience and about how do you see agentic systems actually making decisions in the
Yeah,
market with rationalism behind it.
yeah. I mean, my domain is more in low frequency trading, not high frequency trading. But in my sense, what I've done is literally replicated what a human analyst would do in terms of process.
Mhm.
So,
But by the way, do you think that large language models can be applied to high frequency?
I mean, high frequency trading is not my domain of expertise. So, uh, I don't really know if they could be like, I'm not an expert on that. So, my guess is yes, but to find a use case for an LLM or an agent, you really need to have a very high level domain on the matter. And that's not the case on my end. So I prefer not to, I cannot give an informed opinion about that. But for the
Mhm.
low frequency, of course there is. There's a
And
huge gap there.
okay, and where do you see the gap actually existed?
I mean, the gap is what I tell the low frequency managers. I mean, asset managers like long only, multi assets, CIOs have 30-year experience, but they have no experience using this type of technologies. And even if their analysts do, they rely on the top level management, for guidance. So I think there's a generational opportunity right there. Like I don't have a CIO on top of me. I am completely unbounded. So I am my idea generation capacity is completely with no bounds. So I think my creativity is much higher than in those firms. So I come up with non-traditional solutions for complex problems.
Mhm.
That's basically how I developed this whole system behind Alpha Rho and the whole structure and the whole process behind it.
Mhm. And how do you see agentic system as a product going to, traditional funds like family offices, traditional hedge funds that doesn't really use
Yeah, it's
clever
gonna
technologies?
come, like
Hmm.
it's gonna come, but it really relies on the user understanding of how they work. You need to align expectations. Like they are not magical. Okay, they can increase significantly productivity, but they depend on the user. So
Hmm.
we're not going to get the same output. Me using the LLM, you using it, or a CIO of a family office using it. Okay, so it really depends on the person and how that person knows how it works, so it can prompt it correctly, or the architecture of the LLM, like the processes behind it, is crucial. The orchestration.
Hmm. Um, okay, so the orchestration is very dynamic. It's not amorphical at all, and each fund has its own way to determine how the orchestration is supposed to be orchestrated in advance. And I would like to understand, how do you derive the rightest idea from the client, or the rightest path to derive the rightest orchestration for the client itself. Now, that's not a question about that quantitative research or quantitative modeling at all. That's a really business-wise, very entrepreneurial question in order to understand the need of the client. What do you experience? How do you experience the need? Different orchestrations to different use cases. How do you prove POC proof of concept, for those who doesn't really know? So yeah,
So you mean like the go-to market, right?
yeah, I refer that to the go-to-market. Yeah.
Yeah. Okay. Basically, what I did for the first fund, I mean, I had to raise. I raised approximately like 4 million already for this fund. So what I identified is a huge market gap in terms of product in Spain, and then my go-to market was through YouTube. I identified those funds that were underperforming and had huge client bases. So what I did was analyze these funds, so I could capture part of this traffic of people who own this fund and want to have an analysis. So normally they search on Google um, complete analysis of BlackRock global allocation, for example. And there's my YouTube video. So I captured this lead. This lead then calls me because they like the analysis I just performed. And that's how I managed to raise the capital I have.
Mhm.
And also, how did I get my partner? Because I work with a bank, okay? And I'm 25 years old. So how do you earn the respect or the partnership with a bank that will let you set up a fund under the name, right?
Mhm.
Okay, then you have to have a good value proposition. What do banks want? They want assets. They want
Yeah,
to
but
know.
what type of value proposition? Because value proposition is knowing the case of the client that you're actually approaching.
Yeah, exactly. A bank, what do they want? They want revenue, revenue with low risk.
Okay. So
Okay.
how do you create a proposal for the for large institutions to
First,
work with
the
you?
strategy we're going to implement is really simple. Long only, macro. We only invest in regions, sectors, and factors for equity, for example. We don't invest in individual securities. Okay, so risk is already very low. Simple to understand. There's low turnover, quarterly rebalance. Okay, these are things that the bank likes. It's not silly trading system where you are like day trading, long short, huge leverage. No, it's something sensible. And okay, they like that, but there has to be funding. So how
Okay.
are you gonna get the funding? It's like the chicken and egg problem, right?
Hmm.
Okay, personally, I had to put all of my assets in. I will raise approximately 600K, all of my assets and well, my family's inside the fund. And once we have the fund set up, we had to get to 2 million or 3 million in less than 1 year.
Okay.
So that's how we did it through. I already had like a YouTube following, consulting. You need to know where the money is. And for example, there are many people now that they're selling their companies to private equities. For example, they need some advice. You can earn their confidence by advising them on the deal, for example, getting some deal flow from there. You can also analyze funds that already have huge AUMs. You get some clients, some leads from there also. And that's how I managed to go from 600K to 4 million and also with good performance.
Mhm.
I always publish on LinkedIn the fund's performance, benchmarked. I mean,
And
it's a good product, good price.
how does people actually okay? You're talking about like um an establishment of your brand or promotion of your brand. And I would like to ask you, how does very serious clients, very conservative clients actually approach or tackle the performance of your fund that you're actually posting on LinkedIn? What do you think, like the matter of interaction that they have with it?
You mean institutional investors?
Institutional investors, accredited investors, it could
Yeah,
be.
for the moment, there's many that are following the performance and are following my company, but they are waiting for a track record. They say 8 months is very little track record. They also want more transparency, which I'm actually working on. I'm going to start publishing everything, all the process on my website for them to inspect. But those are mainly the two choke points. One is the track record, and second is the transparency, the process, right? Which actually it's very hard when you're doing quant because you don't want to like reveal the IP, right? So there has to be a balance, and that's what
Mhm.
I'm working right now. So institutional money will come. Also, there's been a lot of friction with the type of strategy I run because it's long only multi-asset. It's all in one. It's better for retail, not for institutional investors. Institutional investors want specialized solutions. Like they don't wanna have the whole Lego built for them. They wanna buy the pieces, right, for their portfolio. So
Okay.
that's something I'm working on too. My whole company is built on AI, so my teams can also work with long short configurations, no problem. And we are going to deliver on that pretty soon.
I got it. Okay. Sounds interesting. And how do you okay, we have spoken about you approaching people, on the institutional side, but right now I would like to understand and clarify how does it work, or how do you think that, creating a proposition to specific clients. Now we have spoken like about the idea, but I would like to ask about a few use cases about like creating the Redis orchestration to a certain client will be completely different than the need of the other client, because that word is very versatile, and people have different demandings, and I would like to understand from you, how do
Yeah.
you derive those demandings from them?
I mean, I talk with them. I say, okay, here's my strategy. I send them a cold email or cold LinkedIn message, or sometimes they reach out because on my LinkedIn post, I always say, I want to partner up. I want to build this with someone. So when they reach out, they carry out like a due diligence. Like we maybe have like one, two, three, four calls, and then they give me feedback usually, and that's when I learn. I say, okay, I should have. I'm thinking about. That's what I told you. Like my strategy is currently not a good fit for institutional investors. I need to work on this. Or this other institutional investor told me he wants to know more about the process. I should build a I should post more about what my analysts are doing behind uh, to gain the confidence of this type of investors. And that's what I'm working on.
I got it. Okay, very
Like it's
interesting.
iteration, as an entrepreneur, you have to talk with the client, present what you have, and then take the feedback and iterate again and present again and iterate. And it's basically like an AI algorithm, iteration.
Yeah, well, iteration is a key now. Okay, so let's speak about hedge fund orchestration. You have mentioned that you take you take time, and you put an effort to create an orchestration for clients. And I would like to ask about what do you realize about like different types of demands from different clients? What do they seek? What do they like? What do they don't like? What do they need? What do they don't need? Um,
I don't give a lot of details about the structure. Like,
no, no, obviously just surface
the
surface level details.
the clients usually want, okay, I'm looking for European equity opportunities. Where should I invest in? What sector should I look in? Why? And what my analysts do is they prepare a report and they say, okay, you should be overweight energy, healthcare, and technology in Europe. I say, okay, let's see how let's see how it goes.
Brilliant. Sounds brilliant.
Yeah, and there's for each position we do like a setup, triggers, um, and exit strategy. The typical stuff people want to see when they are presented a trade, right?
Hmm. Okay.
It's
Um,
like a research, but made by AI, basically. The thing is, there shouldn't be a difference between one of my AI analysts and a human analyst. That's my goal. And for the moment, it's pretty crazy. Like my analysts prepare a presentation in 2 minutes. It's crazy.
yeah, well, the usage of AI nowadays is completely all over, all around. And here on the podcast, I speak about a lot about AI integration, large language models to do quantitative research, and to write code. And I think that people consume it very, very, very differently, because some are very, very conservative, and some are very adaptive to the revolution that ChatGPT and Claude are actually committing each and every single 2 months with a new model release. And And for me, it's a really, it's as an entrepreneur, it's a great signature, or it's a great signal about understanding the type of the clients that you're going to approach. Because if they don't adopt fast, sometimes, the gap between what they can cover and what they cannot cover is going to expand and expand dramatically. And I experienced it in a very, very interesting manner. And to be frank with you, I really like to ask you, how do you experience that adaptation? I know that especially in Spain,
Mm.
clients are very, very, conservative, and they don't really use the technology that we all use. And how do you approach them with new technology?
I mean, in Spain it's crazy. It's like 20 years ago, right? But yeah, the thing is, they feel like it's a threat to their existence, right? So they try to block it mostly. So you sometimes I say I don't even use AI because that sells better. Here's the research report, just read it. It's done by me, and that's how I actually get some sales. But yeah, it's a huge disadvantage for those who don't use it. Like, I mean, if you are conservative or aggressive, but you have to use it. Otherwise, you're gonna fall really, really, really behind because the learning curve is not is pretty steep.
Mhm.
It's compounding because you start at one point,
Yeah,
and
it's it's it's
because
it's, it's, it's compounding, it's accumulating with time,
yeah,
obviously.
it's crazy.
Um, okay, let's speak about a little bit about the research and about your advantages that you're doing with your product. I would like to understand what type of how do you consume that new technology? How do you revise and improve your technology each and every single time? And how do you leverage it and how do you propose to the client, new technology each and every single time? Because you have a strict influence from, a new model release or something.
No, I mean the models releases don't really. I mean, of course, if Cloud comes up with a bigger, better model, of course, like the text is gonna look cleaner or sound better. But my models are the IP is really in the tools they use,
Mhm.
not really in the because the models are a commodity. There's no difference between me using it or you using it. It's how we use it, the difference.
Yeah,
So
well, mhm. No, 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 I'm with you, with you.
uh, so yeah, and also we combine both AI with machine learning
Mhm.
within these tools. So, and I mean, each analyst has developed their own investment strategy. So
Mhm.
what we do is an investment. The CIO selects the best performers based on their P&L, like in a fund, like a traditional fund, and based on these best performers, they do like a consensus overweight, underweight certain assets. Each presents their view, and it's completely auditable, and it makes logical sense. That's one of the things in quant that people often overlook. Like, okay, I built this black box model. Okay, but how does it work? If it's not explainable, it's not investable.
Mhm.
If there's no
Um,
process, unless you are Renaissance Technologies, that you have such a good track record that it speaks by itself, right? But when you have no track record, you have at least to have a process. People can follow, people can trust. Because when things get ugly, people trust the process
mhm.
because the markets are going down. And if they don't really understand what you are doing, they're gonna sell. They're not gonna. It's very hard because money is very you know afraid of
Mhm.
investing in new things, or unless you meet a very big investor at 100 million is 1% of their portfolio, then you hit the jackpot, man. It's very hard to find this.
So, Manuel, a question that I would like to ask you now is about how each user under the same organization is actually approaching a product. So I'll explain that there are products like Aladdin, like One Work Terminal, which are like the king of kings in the financial space, and I would like to ask you um, how do you or what do you think about different types or in the same organization different types of roles under the same organization are actually approaching the same product but experiencing the same product very very differently because each and every single one of
Yeah.
us have a really different type of usage. So how do you see it? How do you envision it?
For us, all our tools are used internally, so there's not like some external like dashboard or API so as such. So we work directly with the bank, right? And the bank is approaching our solution by not hiring more analysts because we are already like normally for a fund they have to hire I think like at least 5 analysts, right? And for a multi-asset one, maybe 10. 5 fixed income, 5 equities. With us, they are just paying us, and the rest of the money is going to marketing, right? So that's the first use case because we are replacing, like we are giving them with the analytical power of 10 analysts at the cost of well, lower cost, right? Um, so that's how they are approaching it. We are not letting them use the AI. We use the AI ourselves to outperform the rest because we think we are going to leverage AI better internally than giving them access to our tools. They're not going to know how to extract the power as well as we can. So we are just giving them the final output.
Mhm. And you don't give them the opportunity to use the product?
We're doing demos to showcase like the process or those, but no, we basically, it's like an analyst, right? A human analyst, you ask them, okay, what's your view on healthcare? Okay,
Mhm.
and they prepare a report. We do the same. They ask us, okay, should we invest in U.S. equities right now? So our CIO, our U.S. equities, well, our U.S. equities CIO prepares a report, and we send it. And they basically take the decision based on their process. If they like the process, they trust the process. They will like they will trust what the CIO says. Otherwise, they won't. It's just
Mhm.
another input. But we are doing this fund that we are currently managing, which is the Global Dynamic Allocation Fund. It's audited, it has its own eSIM, everything. It's purely managed by our analysts, right? They are implementing directly the recommendations. So we are tracking the performance of this versus the other funds, right, in the category. And as I said before, so far so good. So we are proving our point.
No,
Maybe it's too early, but
yeah, no, I don't look, my perspective is completely different that, people are supposed to use the product, but we're having like different types of products, but
yeah,
by the end of the day, different type of products supposed to be serving, different types of clients. So yeah, obviously, very, very interesting perspective. Now, in that point, I would like to thank you, Manuel, for your participation. I really, really like the conversation. On a regular basis, we're not having those types of conversation, like, more like entrepreneurial conversation. We're not doing it, and for me, it was very, very refreshing. It gave me like a map out of the market itself, just to see how things are going. And for me, it was very, very exciting. So I would like to thank you for your participation. It was great,
no
and
problem.
hopefully we'll have a chance to do it now one more time in the future,
Sure.
in the near
Many
future.
thanks. Many thanks for your
That's
time,
good.
and thank you everyone for your attention.
I appreciate it. Okay, guys. So until next time, thank you and bye bye.
Bye bye.